All right, so we've added marketplace functionality to Rocket Pro Forma. And so it's inside the transactions business model. So first of all, you need to make sure that transactions is turned on. I'm going to turn manufacturing off just so that we just have the one business model active. So transactions is on. I scroll down to the transactions section. I'm just going to turn on one tier of transactions to keep this simple. And I enter the average transaction amount. So we're going to turn on the marketplace. So this is the average sale on my marketplace. So every transaction is an average of $200 on the marketplace. Let's say I offer a 10% discount on average. Then I can scroll down and I can see down here, activate marketplace business model. Now there are no settings here. That's because they're hidden by this plus sign. But I'm going to check this and I'm going to turn my transactions business model into a marketplace business model. You will see that repeat purchases grayed out. That's because we have our own set of repeat purchases inside the marketplace business model. So now I can open this up using the plus sign. So you'll actually see there are a ton of marketplace settings here. And we've tried to be as thorough as possible without being confusing. So let's see how I did. So we've turned on the marketplace business model. You can change the vocabulary of your sellers and your buyers. So, if we were making Uber, our sellers would be drivers and our buyers would be riders, right? And you'll see the vocabulary update, and the vocabulary actually updates throughout. So now every time you see something about a buyer, that would be called a driver. And so that just makes it easier. Okay. Now, when you launch your marketplace, you can either do it after you assemble a critical mass of drivers or buyers, which is usually how this works. You need to create one side of the marketplace. This is usually how this works. You need to create one side of the marketplace. So you need to have critical mass. So you focus on building that one side of the marketplace, and then you turn it on. This Rocket Pro Forma automates when that happens. So you can just say, look, when I reach enough drivers, that's when I want to turn on my model. So if I change this to 100, you'll actually see, it'll tell you, sorry, let me set it to, okay, so if I set it to 500, you'll have enough drivers by month 10. If I set it to 100, you'll have enough drivers by month 6. If I turn this off, I can manually set the start month for the marketplace launch, and it will tell me for every month I put in here, it'll tell me how many drivers and how many riders I have that month. But I'm going to set this to happen automatically when I hit that threshold. Okay. Are you taking a percent of transaction fees? Yes. And that turns on this transaction fee section. Are you also charging a flat fee per transaction? Yes or no? So with transaction fees, this is a feature that I've wanted to add for a long time. And so what this does is it takes your $180. Remember, we set the $180 up here. It takes your $180 transaction fee and allows you to take a percentage. So I can take 5%, I can take 6%. And it just calculates what that number is here. And it does that, in this case, I only have tier 1 active, so it does it for tier 1. I can also charge a flat fee per transaction. So in that case, it'll turn on the second thing. So in this case, I'm also charging $5 per transaction. If I turn off the percentage, then I would just have the flat fee. And there's a little math down here that says, okay, what are the total transaction fees and what are the fees as a percentage of the gross? If I have them both turned on, it'll add my 1080 percentage fee and my $5 transaction fee together and give me 1580, or I can have one on or the other on. All right. Are drivers driving the transaction? So remember, we have sellers and buyers. I'm actually going to change our language back to sellers and buyers just to keep it straight here. And what's going to happen, are sellers driving the transactions or are buyers driving the transactions? This determines how your marketplace is set up. and how the economics of your marketplace work. If I check this box, sellers will drive the transactions. If I uncheck it, you'll see it changes to buyers will drive the number of transactions. And then I can choose how often, in this case, I'll just leave the sellers on. Average month of listings between sellers. Sellers list once every 3 months, and each of those times they do one listing per month. I could also, if I wanted to ramp this, I could say my sellers do 5 listings every month, and that would be a much more active marketplace. Number of months until transactions are completed, 0 is equal to same month. So this just stretches out how long it would take to, each transaction would take to complete, how long each listing is up before there's a purchase. And then if any listed transactions are canceled per month, sellers may take listings down, buyers may take listings down. This just simulates, it's kind of like a return rate or a fail rate. All right. Then we have settings for sellers, followed by settings for buyers. So settings for sellers, sellers are acquired via top-down, bottom-up funnels. So you'll actually see in the top navigation menu, there's sales funnels here. The sellers are acquired via those sales funnels. So either I can do the magical thinking top-down, where I just acquire people for a cost, acquire sellers for a cost and don't really worry about the mechanics. Or I can say, I have a wait list of sellers, I have a sales force out acquiring sellers, I'm doing some digital ads to acquire sellers. These are the sources of my sellers. For buyers, we're going to do something different below in the acquiring buyers section. Okay, number of months required to onboard each seller. If there's training or, this just basically slows down the rate at which transactions happen. Average lifespan for each seller. So once I bring a seller in, how long do they stick around? And this automatically calculates a monthly churn. In this version of the marketplace, it only looks at things monthly. There's not an annual piece here. I will add that in at some future date. Do you charge a setup fee for sellers? Yes or no? I can turn this on or off. In this case, every time someone's onboarded, a new seller's onboarded, it will charge them $5. Do you charge a listing fee for sellers? Yes, no. Again, every time someone lists, it would charge them this fee. Do you charge a subscription fee for sellers? And here's the monthly subscription fee you charge each seller. And then the percent of sellers who pay that subscription fee. And again, this version of Rocket Pro Forma supports monthly subscriptions for sellers in your marketplace. All right, now we're going to look at acquiring buyers for your marketplace. So the sellers are acquired from the sales funnels. The buyers, we're going to do some calculations here to acquire the buyers. Will you have a wait list? How many buyers will be in your wait list? These people will hop on board. Remember, we set a launch month up here. So when that launch month hits, which in this case is month 6, when we reach critical mass of 100 sellers, all of my waitlist folks, all of my waitlist buyers are going to hop on board and I'll suddenly have 1,000 buyers. And then I have 2 other sources of buyers. One is paid acquisition. So will you pay to acquire buyers? Yes. Launch month to start acquiring buyers, your estimated cost to acquire each buyer, and monthly budget. And you can grow that budget at a percentage per month. So in this case, I'm going to start acquiring buyers in month 6. So in year 1, that gives me 6 months of acquisition. I'm paying, let's call it $1,000 a month to acquire those buyers, and each of them cost me $5. So in the first month, I will acquire 200 buyers, which is 1,000 divided by 5. In the next month, I will spend $1,050, which gets me a few extra buyers. And so for 6 months, you can see I spend $8,000 and gain 1,600 buyers using this method. In year 2, I'm using the full 12 months. Remember, I only used 6 months of year 1. So when I use the full 12 months, I also have a higher budget. I spend a lot more of those 12 months, but I also acquire a lot more buyers. So in this case, you can see the buyers growing over time. And then I can also acquire buyers organically. So in this case, it looks at how many people are coming to the website, and then it collects 2% of everyone who comes to the website turns into a buyer. So in this case, you can see how this grows over time. And my website settings are in the sales funnel section below. And then I have settings for the buyers in the marketplace. So again, when I bring a buyer in, just like with the sellers, they have a lifespan. So they stick around, in this case, for 18 months. That calculates a monthly churn rate for me based on that number. And then I can limit the number of transactions that buyers complete each month. So that would just turn on a ceiling just to be a little more realistic about how many transactions buyers will do each month. Otherwise, there'll be unlimited buying. Average number of transactions per buyer per month. This just, this is how many transactions are completed. And again, this just sets a ceiling. If sellers are listing a lot of things, you may want to have some realism around, the buyers not buying infinite amounts of listings. Okay, and then fees for buyers. There are two types of fees. There's a setup fee or an onboarding fee. So that's a one-time fee when you first bring the buyer into your marketplace. And then a subscription fee, which in this case, again, is only monthly. You can turn it on and off. $5 a month, and 25% of your buyers pay for the subscription fee. So that's it for the marketplace. And what happens when you turn on the marketplace on the pitch deck slide, you will see your KPIs turn into marketplace KPIs. You have transactions, sellers, and buyers. So you can see how many transactions are running, you can see how many sellers you're bringing into your marketplace, and you can see how many buyers you're bringing into your marketplace. And the transactions in this case, because of the way we set up the assumptions, the transactions are keying, sellers are driving the transactions, and they're doing 5 transactions per month, and they churn out at 4.2% per month. So you will see the transactions are more or less tracking about 5x the number of available sellers. And if you want to, you can do a deep dive. If you go into the Customers tab, you can scroll down and you can get to right below the transactions. You will see here are the marketplace calculations. Customers is kind of my catch-all for all the complicated calculations that happen. So everything flows from assumptions and hiring plan into customers, and from there to the pitch deck slide, the income statement, the cash flow statement, and the balance sheet. And so you'll see all the calculations for the marketplace are in this section. So you can see the number of buyers, the number of sellers, the number of transactions, buyers and sellers who are being onboarded, and then all of the fees, and that all totals out. So if you ever want to check things, the detail, just jump into the Customers tab and you can see where that is. But the summary you will see on the pitch deck slide, and that's usually enough. So good luck. Let me know what you think. Please give me feedback on the Marketplace tab. And again, if you're not using it, you can just uncheck it here and close it up. And then you don't even have to think about it. And you'll see that repeat customers pops back on for your transactions.